This is the press release, and this is from today. And just doing a little bit of digging into this, um, it's pretty concerning. When you're looking at what this deal actually represents. So here's the situation: Anthropic, it needs chips. It needs a lot of chips. We're talking about compute infrastructure to train and run frontier AI models at scale. It's not a server closet, right? That's billions of dollars of specialized hardware, and they need it right now. And in fact, they're really behind the curve when it comes to OpenAI. And Anthropic had made a deal with Musk to use his compute, but they need their own as well too. And banks won't touch this, not at this scale, not for an unprofitable AI startup. And I know that's kind of controversial to say because what did they just have an IPO for almost a trillion dollars? These are future earnings, right? They're burning cash. No matter how much Silicon Valley loves this story, traditional banks and traditional bank lending, they have capital requirements. They have regulatory scrutiny. They have concentration limits. You don't get a $35 billion commitment out of a bank syndicate, right? For a company that's burning cash. They're essentially selling $20 bills for $10. That's the business model right now. They're selling, you're buying $20 worth of compute for $10. They're burning money. So where does the $35 billion come from? Where does it come from? Private credit, Apollo and Blackstone. And so the way that they structured this, we should probably be paying attention to this because this is .com vibes. This has .com vibes. Apollo and Blackstone, they aren't lending Anthropic $35 billion. That's what most people assume is happening here. That's not what happened. What they did was created a special purpose vehicle. It's called an SPV. Think of it like a shell company with one job. The SPV raises the debt, right? It raises the debt. So the SPV buys the chips from Broadcom, and then here's the key move. The SPV leases those chips to Anthropic. Anthropic doesn't borrow anything. Anthropic just pays rent. So the debt is inside the SPV. Anthropic's balance sheet shows a lease obligation, not a loan. So from an accounting standpoint, the leverage is invisible unless you were to know where to look, right? And here's where it gets really strange. The chips are the collateral. So if Anthropic stops paying rent, the SPV theoretically liquidates the chips to repay investors. So that's the backstop. That's the whole structure that this deal is built on. The assumption that you could sell $35 billion worth of AI chips in a distress scenario and get your money back, is that realistic? This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.